Let's turn our attention away from Egypt for a moment and talk about Bruce Berkowitz, because he has a message for former AIG boss Hank Greenberg. It's time to move on. Berkowitz is an investor, and he's AIG's largest non-government shareholder. He says Greenberg is wrong to say asset sales have weakened the company. He spoke exclusively with Bloomberg at a conference held by the investor club Tiger 21. John Erlichman has the details. John?
Eric, Bruce Berkowitz is one of the most influential money managers in America. His $17 billion Fairholme Fund is the second largest shareholder in AIG, right behind the government. Think back to what former AIG boss Hank Greenberg told our Margaret Brennan earlier this month, that asset sales have weakened the company. Have a listen.
Of course they're making themselves weaker. You're giving up a whole line of business that was a very major part of AIG. It's foreign life insurance business.
Well, Berkowitz disagrees with Greenberg. He says the asset sales were necessary to repay taxpayers and that they got good prices for those assets. Here's Bruce Berkowitz on Hank Greenberg.
Hank Greenberg's a brilliant man. He's just, he knows more about insurance. He's forgotten more about insurance than I know. And it's been a difficult, it must be a very difficult process that Hank has gone through. But the bottom line is that the company, previous times, had a few businesses that maybe were the equivalent of picking up pennies in front of a steamroller, and the price has been paid, and it's time to move on, and it's time for the company to rebuild.
We also asked Berkowitz if he'd like to buy some of Treasury's stake in AIG. It's preparing to sell, and his response, Eric, was, we'd love to have a bigger investment in AIG.
So, John, Berkowitz says AIG was right to sell these, to make these asset sales, but he's also continuing to follow them, right? A former AIG unit is the centerpiece of his push into Asia.
Yeah, absolutely. There are now 2 Asian stocks that make up more than 10% of the Fairholme Fund. AIA, which was part of AIG, recently went public through the Hong Kong Stock Exchange, and China Life. Those 2 names are a huge shift for Fairholme, which is traditionally focused on the U.S. market. Here's the explanation from Berkowitz.
I'm embarrassed to say it's only been the last few months that I've made a few trips to Asia. Should have done it 10 years ago. With such a growing middle class and the need for life insurance and the maturing of financial markets, there's going to be a lot to do, and I hope Fairholme can do more and more.
And he's got about $5 billion of Fairholme cash to play with, so if he puts more of that to work, if those investments work out in China, that's his plan.